What's up, everybody? Welcome back to another video. Today we're talking about Palantir stock, and they have had a pretty dramatic fall alongside a lot of other technology companies in the last few weeks here. And when they reported earnings, the stock popped up. I think they reported on around February 3rd or February 4th here, and then the stock popped to $125. And then obviously since then there's been a lot of news and a lot of things going on and a lot of uncertainty in the market, and the stock has pulled back. So in today's video, we're going to talk about what's been happening with Palantir, what you need to know if you're an investor, and what I'm doing personally with my position. If you're new here, my name is Sheldon, and I've been investing in the market for over 5 years now. This is my portfolio. I have about $80,000 invested in the market. These are all the stocks that I own, and obviously I am a Palantir shareholder. I have 85 shares at a cost basis of $8.30, so we're up around 920% total in Palantir at the moment anyway. So if you're somebody that's interested in investing and you want to stay updated on the market and you want to stay updated on stocks, then subscribe to the channel and let's all go on this crazy journey of investing together. So I don't want to waste your time. Let's get right into it. And I want to start by giving a little bit of an overview of where Palantir is currently trading at. So obviously on a 1 month chart, it doesn't look that good. It's down 24%, call it, on a 1 month. And from its highs, I mean, it hit a high of around $25. So from its coming down off its highs, it's probably over 30%. And if we look at a year-to-date chart, though, it's up 12% year-to-date, so since the beginning of January. If we look at a 1-year chart, it's up 225%. And if we look at a 5-year chart, it's up over 1,000%. So if we zoom out a little bit from just the last month, the returns in Palantir have been really, really good. Okay, and it's important to take a step back and always zoom out when you're looking and analyzing stocks like this. So currently, Palantir has under a $200 billion market cap. Their trailing 12-month revenue is under $3 billion, a little bit under $3 billion. So obviously, right off the bat, you can see that their price-to-sales ratio is really, really high compared to what is typical for a price-to-sales ratio. Like, it's a $200 billion market cap company trading, and it has only $3 billion in revenue. So obviously, the valuation on Palantir is crazy. We've talked about this before. You probably know that if you're watching the video. The PE ratio, again, this is a signal of their high valuation, and let's just throw that back on a 1 year, I guess. But their PE ratio is 445, and forward PE is coming down. It's coming down to elevated levels, but obviously forward PE is also just projections. So, I mean, I like Palantir. Obviously, I'm a shareholder and I'm bullish on the stock, but we're going to talk about why it's been going down in today's video. And if we just compare some metrics quick to somebody like an Oracle, Oracle is obviously a way bigger company, and they have a $433 billion market cap. So they're more than double the size of Palantir. And if you look at their revenue, like, their revenue is at $54 billion. So obviously you can tell that the valuation on Oracle isn't as, it's not as overvalued as something like Palantir. I shouldn't say overvalued, it's not as expensive as a stock like Palantir. Obviously the PE ratio on Oracle is under 40, which is a lot more typical for the industry that these stocks are trading in. And obviously Oracle is an enterprise data management company as well. So it's one that I like to compare it with Palantir. I think it's a reasonable competitor to look at metrics and compare metrics. And if we look at their price to sales ratio of Oracle, they're trading at like a little bit under an 8 price to sales, which obviously we can see when we look at revenue and market cap. So basically, like, if you don't understand like PE and price to sales, you can see that the gap between revenue and market cap is a lot smaller in terms of ratio than a stock like Palantir. Because Palantir is trading at, they have revenue, of $3 billion, and they're trading at $200 billion. So the ratio there is a lot bigger, meaning they're a more highly valued company. So basically the question is, what type of stock is Palantir? And they are a high growth, highly volatile stock. And if we just take a quick look at growth rates here in terms of revenue, it's like for Palantir, they have pretty high growth rates, right? 47, 41, 23, 16, 28. in terms of revenue year-over-year growth. And if we look at Oracle, bigger company, slower growing company, -1, 3, 4, 17, 6, 6. So they had a very good 2023, which is interesting. But if we also look at a measure of beta, the beta that Palantir trades at is 2.8. And the beta that Oracle trades at is a lot lower at 1.07. And beta is basically a measure of volatility and a measure of risk. The higher the beta, the more volatile that stock is going to be, generally speaking. So, my favorite, or one of my favorite sayings in the stock market is volatility is the price of admission. And that definitely goes with a stock like Palantir. You're not going to get in and you're not going to trade Palantir and have no volatility, but have all that upside potential, right? It's a highly volatile stock because the potential for gains is so high, because their growth rates are also so high. And so you have to understand, if you're a Palantir investor, you're going to have volatility. You're going to have to deal with a lot of volatility. The stocks do not just go straight up and to the right. They're volatile. They go up, they go down, and Palantir is an example of a stock that generally goes up and down more than other stocks. And obviously right now, it's not just Palantir that's volatile, it's the whole market. There's lots of volatility going on in the market right now. And if we look at something like the VIX, so the VIX has obviously spiked. The VIX is just a volatility index here. And if we look year to date, since all of the tariff news, there's been a really big spike in the VIX. And it's trading at historically, at least in terms of the last year, relatively elevated levels. Like if we look on a 5-year chart of the VIX, it was trading at the levels that it is at today back in like 2022 when the market was crashing. 2022, the market crashed pretty much the full year. So, like, maybe not quite. I believe it was like, it was like pretty much the full year, to be honest. And so now the VIX is, it typically spikes when the market is going through pullbacks and little corrections and crashes. And so why is this volatility happening in the market right now? And obviously, there's been a lot of tariff news. And Trump has said he's implementing tariffs, he's not implementing tariffs, he's implementing tariffs, he's not implementing tariffs. So Trump has currently paused them again for the next month or so. So, like, who really knows what he's doing with tariffs? and depending on what you think about them, right, it almost doesn't matter in this sense, because as an investor, you have to look at just what's happening, and you have to learn how to deal with it. And obviously, you have to learn, in this case, how to deal with all of the uncertainty. And if we look at the fear and greed index here, I think it's important to realize as well that this can also get a lot worse. Like, we're trading in extreme fear times right now. But if you go ahead and look at something like the S&P 500, like, we're not even down, like, I forget what we're down on the S&P 500, and I'll pull it up right now because I think it's important to look at that. And this is an S&P 500 ETF, but on a year-to-date chart, we're basically trading flat on a year-to-date chart of the S&P 500. And so trading flat on the S&P 500, and we're in extreme fear times. Like, we are not even close to crash territory at the moment, right? Like, yes, there's been a lot of high-tech, highly valued tech stocks that have gone through a bit of a pullback, for example, like Palantir, but we're not even close to crash territory. Like, the S&P 500, I believe in 2022 went down like almost 20%, if not more than 20%. So just know that, yes, we're trading in extreme fear, technically, with the fear and greed index, but it can get a lot worse. Now, so that is a lot of sort of macro economic news in terms of the market, and all of that macroeconomic pressure has led to Palantir, obviously, in the last couple months. Let's bring it back to a 1 month. Like, a lot of this is driven by the macroeconomic pressures and all that uncertainty that's going on in the market right now. But on top of all that, there's also been some news in Palantir that hasn't, like, there's been some bearish news come out, and for a long time it seemed like there was never going to be, it was almost impossible to have bearish news come out with Palantir. So let's look at it. And one thing that came out and one thing that happened is the Pentagon has proposed cutting 8% of its budget each year for the next 5 years, amounting to around $50 billion each year. So, in my opinion, personally, I don't think this is really anything to be worried about if you're a Palantir investor. This is something that if the whole market wasn't going crazy right now, this is very small news, in my opinion, right? Like, Palantir's, like, the big bet that you're making on Palantir is in the commercial side of their business, not even necessarily the government contracts that they have. Even though obviously the defense and military contracts that they do have are very good. And I think personally that I don't know exactly if they've come out and said what is exactly getting cut. I don't think it's going to affect a lot of the Palantir contracts that they have with the military. And, you know, the contracts that Palantir has are very sticky. You know, like if they go through and cut a lot of military spending, I don't think it's going to be Palantir that gets cut, because those contracts are so important, because they're so, like, they've been working together for a while. Like, Palantir has been in government contracts with the U.S. government for so long now that I just can't see them pulling out of a lot of those contracts. And even if they do, let's say they do, right? Like, my bet, and I think a lot of retail investors bet in Palantir, is the commercial revenue side of things. It's not necessarily the government contracts. So that's at least, like, that's one piece of bad news that came out in specific regards to Palantir. Also, there's been news about Alex Karp coming out and selling his shares. So obviously, when you're buying into a company and the CEO is actively buying or selling shares, that's not, like, in terms of an optics perspective, it's not ideal. But basically, Karp has dumped $45 million worth of stock in the past 2 weeks after unloading about $2 billion in 2024. So I find it interesting because in 2024, you know, Palantir obviously had a crazy year. Like, if we look at the 1-year chart of Palantir, this is the majority of this chart is 2024. So, like, they had the stellar 2024, and nobody was talking about Karp selling shares while the stock price was going to the moon, right? Nobody was bringing that up. But obviously now there's been a big pullback in the market, and recently he hasn't even sold as many shares as he did in 2024, but now this is big kind of bearish news. And obviously the stock has been at elevated levels, so maybe Karp sees it as a time where he's like, you know what, maybe I should cash out some shares of this company that I've helped build over the last 20 years, I think, of however long he's been running the company. And, you know, for that, I don't blame him. You know, like, it's just the optics of that aren't ideal. So obviously that was a lot of bad news, and honestly, if you're asking me, I think Palantir has held up relatively well through all of that. Like, if we look at just, let's say, a year-to-date chart, it's still relatively on an uptrend, right? If you just ignore this big spike off earnings and then the big pullback in the recent weeks. And it's still trading, like, it came back today. It's had a 5.5% day today, and it's back at around $85 a share. And I wouldn't be surprised if the market does kind of go into a more broader market crash and a lot of stocks do continue to pull back, you could see Palantir trading at like $50, and that wouldn't even surprise me, right? Like, that's the type of stock that Palantir is. It's very volatile. It's a risky asset to hold in your portfolio. Speaking of, now I want to talk about my position in Palantir and why I'm actually still bullish and why I still hold the stock in my account. So if we look at my portfolio, I mentioned it at the beginning of the video, but it is, I have 85 shares at $8.30, and it's the biggest individual stock that I own in my account currently. I have been like Alex Karp lately, and I've been selling shares and taking some profits in the stock, mainly because I am trying to maintain a strategy in my portfolio where I have, a solid amount of my money in ETFs and S&P 500 tracking ETFs, and then a large, like the other half of it basically, which it's a little bit more than half of it, but the other half in individual stocks. And because Palantir went up so much, it's pretty much like the allocation in my accounts has gotten a little bit uneven, to say the least, because Palantir went up so much. It was like, at one point, Palantir was like 25% of my whole portfolio. And for me, I'm just not necessarily comfortable with having such a risky asset as such a big percentage allocation in my portfolio. So I was selling a couple shares. I've taken almost 50% of my portfolio, or my Palantir position, off the table, and I have been taking profits in the last couple months. And just to mitigate risk in my portfolio, it's a little bit of a sleep better at night move. Now let's talk about why I'm still bullish on the stock and why I still have it in my portfolio as the biggest individual stock that I own. So if we go back to Palantir, and obviously the fundamentals of it are just, they're rock solid. The fundamentals of the company are very, very good. In terms of just revenue growth, right? Like they have 47%, 41%, 23, 16, 28, and that is not normal revenue growth numbers coming out of a company, right? Like those are very, very good growth numbers, and they're expected to continue to grow. So if we pull up their investor relations page, so this is their Q4 2024 highlights, which, 5 gold stars on this earnings release because it was just so good. And obviously, U.S. revenue grew 52% year over year to $558 million. U.S. commercial revenue growth grew, which is, in my personal opinion, that is one of the main reasons why I hold Palantir, is for that commercial revenue opportunity. And their commercial revenue grew 64%, which is a segment of their revenue, obviously. And it grew to $214 million. U.S. government grew, like, even though, like, I maintain that I think the main opportunity is in commercial, their revenue growth is in government. The revenue growth in government is still really good, and I'm still going to take that as a shareholder, right? So they grew 45% year over year to $343 million from government contracts, and overall revenue was $828 million, which was, they beat a lot, like every estimate that they had going in from Q3 2024 to Q4 2024. I'm pretty sure they beat everything across the board, and they beat everything by a little bit of a margin as well. So obviously their full year for 2024, they had U.S. revenue of just under $2 billion, 1.9. Full year commercial revenue was $700 million. Government revenue was $1.2 billion. And so these are just, like, those are very good growth numbers. and on top of that, it's a data management and AI company, right? And a lot of the macro trends in AI are getting adopted by enterprise customers. And Palantir is mainly, if not solely, a B2B organization where they sell to enterprise customers. So as all these enterprise and big organizations start to adopt AI, Palantir is going to be leading the charge with all of that and all of their company and all of their clients, right? And so now they guided for Q1 of 2025 to have $858 million, or to have revenue between $858 and $862 million, and adjusted income from operations between $354 and $358. So, and for full year 2025, 370, like 3.7, roughly 3.7 billion in revenue estimate. So obviously we won't know if they meet that number until the end of the year, but we're going to get their next earnings report, I believe. When is their next earnings report? May 5th. So on May 5th, we're going to know if they come in and how they do in terms of what they expect for revenue. So it'll be Definitely an earnings report that I am paying attention to because Palantir, obviously, it's a big investment for me. And it is a company that I believe in and one that I expect to continue to grow, and a company that I believe that they build really cool products and do great things. So that was everything that I wanted to talk about in today's video. I would love to know what your opinion on Palantir stock is. If you're bearish, why are you bearish? If you're bullish, why are you bullish? At the end of the day, this is just my opinion on the stock, and I could be completely wrong. I am not claiming to be an expert here, and I'm just some guy on the internet that has been buying stocks for around 5 years now, and I like to share what I've learned along the way. So please tell me why I'm wrong if you think I'm wrong. I would actually love to know what all of your perspectives are, if you agree or don't agree with what I am saying in these videos. And with all that being said, I wish you the best of luck on your investment journey. Peace.